Hi, a very good afternoon. This is Abhay from Manupatra. I extend a warm welcome to all our attendees for joining us today for this webinar, which is a primer on due diligence. It is also my duty to introduce to you our presenter for today, Mr. Deepak Gupta. Mr. Gupta is a practicing business lawyer with over 37 years of corporate experience in Indian and global businesses across industries from manufacturing, services, finance, banking, and consulting. Few of the companies where he has helmed his legal practice and division are PwC, American Express, and J Engineering. He is also credited for playing a pioneering role in establishing law and policies for IT and ITS industry in India, working closely with Government of India at highest of levels. I'm sure that all our attendees will derive much value and insights from his experience through this lecture. Before I request him to start, a brief housekeeping. We'll be taking questions at the end of the session. So if you have any, please note it down. The session will be approximately of 60 minutes. At the end of the session, there's going to be an online test. The link for the test has already been shared with you in the email invite. If you don't have the link, no worries, we'll share it again. So whosoever gets more than 60% will get a certificate. So without further ado, let me request Deepak sir to share with us his insights on the topic, sir. So now you can share this.
Good afternoon, everybody.
Good afternoon, sir.
I hope I am audible.
Yes, sir. Very much audible. Loud and clear.
So, before I start, there are three opening remarks I would like to make. First is, what is the expectation you should have from your host this afternoon? This session is essentially aimed at sharing learnings with beginners, those who are wanting to learn about due diligence. And therefore, if there are any participants here who are already proficient or expert in this area, you are welcome to stay. But the aim of the session is to share learnings with the beginners and those who want to get into this line of practice. The second observation relates to the fact that due diligence is a very vast subject. And what we will be focusing on will be some general principles which may apply to any type of due diligence. But our main focus will be on areas relating to legal due diligence. And third, and interestingly, this is actually a post-lunch session, which we call the graveyard shift. So many of you would have the tendency to doze off or maybe indulge in multitasking. As this is a due diligence seminar, I would suggest that you practice how due diligence exercises are done and maybe use a pencil and a paper to write down points as we go through this. That will prepare you how a due diligence exercise is actually conducted in real life. Because multitasking can sometimes not work, and in a due diligence exercise, you can end up losing important points. With that, I'll start the presentation. So first and foremost, what's the importance of due diligence? And due diligence is not really a very exotic thing. We all are very familiar with due diligence. We all do it all the time, even though we may not be using the word due diligence. When you buy, for example, any small item, you do a basic due diligence. When you buy any major item like a house, you do a due diligence which may be of a different level. But regardless of what you are buying, what kind of transaction you are entering in, there is due diligence that is involved. And so it's nothing exotic. The only difference is that the due diligence can vary. It can be very simple to very complex, depending upon what the transaction is. And the important part is when we look at due diligence in the context of business transactions, that sometimes the due diligence effort also ends up shaping how the transaction takes place. So that is the broad importance of due diligence, and I will not belabor more on that. There are broadly three types and categories of due diligence. One is seller side due diligence, buyer side due diligence, and there could be compliance checks which organizations may do on their own. Now it's very easy to understand what's a buyer side due diligence. And if you are buying something, as I mentioned, you will do a due diligence. But there is also a seller type due diligence. And what is the seller side due diligence? If you are, for example, wanting to sell something and you want to invite bids from a large number of players, or alternatively, if you are a large player and you are selling something small and you would not like the buyer to be investing much on the due diligence, you may actually conduct a seller side due diligence in advance. And that due diligence report is then available to prospective buyers, which will help them take a decision. Now, that does not prevent the buyer from doing its own due diligence, but from the seller's perspective, you have enabled the prospective buyers and you have also enabled them to submit bids. Then there is a compliance check, which sometimes organizations do, either in anticipation of due diligences or in anticipation of transactions. So there are broadly these categories. And once you get into the exercise of due diligence, what is the scope? The scope can be very wide or it can be very limited. That depends on the transaction. But it can include a business side due diligence, whether the prospective transaction involves a strategic fit or not. It can be a tax due diligence, it can be legal, it can be human resources, financial, real estate, corporate, commercial. Various aspects of the business could be in focus, either singularly or all of them together. And the scope of the DD, therefore, depends upon the transaction. And these are some of the dimensions that may be involved. And at times, the focus could be significant on one area, or it could be equally distributed on all. Before you get into an exercise of due diligence, it is very important to understand what the business deal is. As in, why are we doing the due diligence? What is the business transaction? And it's the key question that you have to ask before you get into the due diligence, because that will drive the nature of due diligence. Let me give you a simple example. If you are buying a business, you could buy the business in two ways broadly. You can buy the business without buying the legal entity in which the business is housed. So for example, there is a company which owns 5 businesses. You may be only wanting to buy one business. Alternatively, there could be another situation where you may be buying the company itself. Now the due diligence will differ depending upon what is the business transaction. So it is very important, first and foremost, to understand what the business transaction is, what is the aim of the business team. Then the due diligence will vary depending upon the size and scale of the transaction. It can vary depending upon whether the entity with whom you are dealing with is a listed entity or an unlisted entity. There could also be competition law issues. For instance, if you are buying a competitor or a competing entity, there could be special issues that may arise in the transaction and also as you conduct the due diligence. And we'll deal with some of these later. There could be jurisdictions involved, which could be the same jurisdiction or there could be multiple jurisdictions. And when I talk of jurisdictions, it essentially means it could be a particular state, it could be a particular country, it could be a mix of states and mix of countries. And as we all know, laws differ, and to that extent, it will have an impact on the due diligence exercise. So it's a key point to understand as a part of the deal. Then comes, what is the level and extent of due diligence that one is wanting to do for that transaction? And The scope of due diligence can also vary depending upon the expectation of the business team. Therefore, even if two transactions are similar, the business teams may want a different scope for the due diligence. And that is also important to understand by the team that is going to perform the due diligence. Therefore, the first point is you should be a business lawyer as you are looking at a due diligence, where the business comes first. As a legal due diligence exercise, the lawyering part is the later part. But if you don't understand the business first, there is no way you can do a good due diligence from a legal perspective. And therefore, understanding the business deal is the key to be indulging in a good due diligence exercise and then providing a report that will be useful for the business. And this brings us to the first point as you undertake a due diligence exercise, which is you must agree on the scope of the due diligence with the business team or the team that is hiring you to conduct the due diligence. Or if you are an in-house lawyer, what is the expectation of the business team in this exercise? It's important to understand for what duration the due diligence will be. So for example, if you're buying a business, you will look at how many years of data, what is the period, what will be the sample size that you will look at for conducting the due diligence. It could be by location, by factory, by category. Due diligence is not 100% audit. It's a test check. It's to give you a feeling and understanding of the significant issues. Therefore, sample size needs to be agreed. If there are 1,000 employees, for example, and you are doing a legal due diligence from compliance point of view, it's important to understand how many employees will you cover in your due diligence exercise for a detailed analysis, and how many will you cover on the overall basis. Then it's also important to understand how the due diligence will be conducted. Many a times, due diligence is conducted remotely, where you are actually doing a desktop due diligence and you are not expected to visit the site of the customer. So it's clear that the nature of due diligence will vary depending upon where and how it is to be conducted. There are, of course, non-disclosure agreements that you need to sign, or if you are being a subcontractor in the due diligence exercise, somebody in the chain of command would assign non-disclosure agreements. Ultimately, as a part of the due diligence exercise, you will have access to data which otherwise would be confidential. And therefore, it is important for the business teams that the non-disclosure agreements are signed. And it is also important, therefore, for us, if you are involved in a due diligence exercise, to understand what you will be getting to see, what information will be available with you, and what is the nature of effort that you need to put in so that you do not end up disclosing any confidential information. Then comes a very important factor, which is what are the focus areas and what are the transaction drivers. So let's take a simple example. You want to buy a house. Now, depending upon why you are buying the house, for whom you are buying the house, for what purpose and duration you are buying the house, the focus will change. Similarly, which business you are buying, why you are buying the business, what is the main thirst for acquiring that activity, that will decide what are the focus areas and what are the transaction drivers which must be kept in view as you conduct a due diligence exercise. Therefore, every due diligence exercise will not be the same, but can vary depending upon the focus area and the transaction drivers. And it's very critical to understand these from the business teams before you embark upon the DD exercise. It's also important to understand what are the timelines available for due diligence and in what time the business is expecting to complete the transaction. The entire exercise and effort is aimed at completing the transaction within a certain timeline, and therefore, the due diligence exercise cannot be conducted for an indefinite period of time. Once you get an idea of what the timelines are, then it's easier to plan, and that also plays into what is the sample size and various other aspects and dimensions of the due diligence exercise. So this also needs to be agreed in advance before the DD is undertaken. There are at times materiality thresholds which have to be agreed in advance. So for example, if you're buying a business, the business team may be interested in knowing primarily or principally certain types of liabilities which are above certain thresholds. So if you're buying a 100 crore business, you may not be interested in knowing every 10 rupees, 20 rupees, 100 rupee, 1000 rupee transaction and its implication. But if the aggregate of these transactions or certain special transactions have implications beyond certain value thresholds, then those are important and have to be pointed out during a due diligence exercise. And therefore, you need to understand before the due diligence is undertaken, what are those materiality thresholds with regard to values and also with regard to potential liabilities that you need to highlight, whether the same are civil, criminal, or others as in tax or likewise. There could be certain exclusions and certain specific inclusions in the due diligence exercise. So these need to be agreed in advance with, again, the business teams as to what are the areas you will exclude and what are the areas you must include in the due diligence exercise. So for example, if you are doing a due diligence exercise of acquiring a business, as with the business, you may also end up acquiring certain land, certain immovable property. One of the exclusions could be you are not going to validate the title, but rely only on the information provided by the target. But on the other hand, in certain cases, there could be an expectation that you have to necessarily also do a title due diligence of the land or the immovable property. Therefore, it is very important to agree what are the exclusions and inclusions, because that again drives what effort you will undertake eventually. If you are an in-house resource or an external lawyer, it's also important to understand what is the fees or the time and resource estimation for this effort that you will need to put in for the due diligence exercise. And this also must be agreed in advance before you start the due diligence exercise. Occasionally, there are pre-decided formats of certain items which are important in a due diligence exercise. So there is something called an information request list or an IRL. Now, an information request list is something which the team that is conducting the due diligence exercise draws up and sends to the other party, basically requesting certain information in advance and confirmations from the counterparty. At times in the due diligence exercise, these are standardized, and therefore there is a standard format that every due diligence participant need to follow, whether it's the legal team or the tax team, or if it's a multi-jurisdiction exercise, then the India team, the US team, and any other country has to follow. So you need to understand if there are any pre-agreed formats or pre-decided formats for the information request list. If not, and if these need to be developed, then that has to be clear. There is no point in starting a due diligence exercise without knowing these things, because then it can become very inefficient if later on you discover that the information request list was in a different format or a different standardized format had to be followed. It's also important before starting the due diligence exercise to understand if the report, the final due diligence report that you have to submit, is it to be submitted in a particular format? Is it to be submitted with certain specific information by every team? And this becomes very important if it's a multi-country, multi-jurisdiction, multi-business due diligence, because ultimately the findings of the due diligence exercise have to be synthesized and aggregated by business, by location, and then the ultimate report prepared. Therefore, sometimes there are pre-agreed reports in which the due diligence findings have to be submitted. And it is important to understand these, because these reports or the formats of these reports will also give you an idea of the nature and type of due diligence effort that needs to be put in. If these reports are not standardized and if nothing is available, then it will be good to develop some basic format of a report, which will give you an idea or what is the point of arrival. So you would know very clearly as to what findings you need to look for when you are doing the due diligence, so that when you end up at the stage of preparing the DD report, you have actually covered all of these points. And some of these things are very helpful as you start the due diligence exercise. And therefore, these aspects of the scope are very important to agree in advance. There are often dependencies as you conduct a due diligence exercise. So there could be various applicable laws, and it is not always feasible for you to in advance know about them. So that's a dependency, because you need to know certain laws. And when I say laws, these could be notifications, these could be day-to-day rulings, these could be day-to-day regulations that may be applicable to a business. And as you start a due diligence exercise, these need to be accessed and identified. So that's a dependency, and you need to identify it before starting the exercise so that you can know how you will access and identify these laws, which will be critical to help in performing the DD. There are often language and translation issues involved, particularly when there are due diligence exercises that are undertaken at a state by state level or a country by country level. And when I say translations, these issues come up because, for example, if you're doing a due diligence, let's say in a state of Gujarat, many of the forms and formats, etc., may be in the local language. Or if you are doing a due diligence, let's say for a country, let's say France, or let's say Germany, there could be documents that will be available in those languages. And therefore, it will be critical for you to look at the feasibility of translation of the local vernacular languages or local languages of the different countries. And even though as a lawyer, you may generally be performing the acts in your jurisdictions, but for example, if you are hired to do a due diligence for India, India itself has so many states and so many languages. So you will have this as a dependency, and it will be important to understand what this is before you embark upon the exercise so that you can plan for it. Of course, it's very important to understand how you will have access to the documentations which you have to review. And that's again a critical dependency, because if you are not able to access the critical documents, you will not be able to do a proper due diligence job. As you embark upon legal due diligence, there are many other teams who may be at the same time undertaking due diligence in other areas. For example, there could be an accounts team, a tax due diligence team, a business due diligence team. And it will be very important to understand if there is a concurrent exercise being undertaken by other teams in different areas. And I say this is important because no issue in today's business is a standalone issue. So if there is a legal issue, it will have possibly accounting, tax, and business implications, and vice versa. Therefore, it's important to know if there are other efforts being put in by other teams, because then if you identify a certain issue or if the other teams identify certain issues, then it will be important to exchange findings with each other and figure out the way forward for the business. Counterparty support is a key area because you are dependent upon getting all the information and documentation from the counterparty. What are the contact points? Who will provide this information? And how this will be received by you, kept by you, shared by you, are all important aspects to be clear about the due diligence exercise. And there could be others depending upon the nature and type of due diligence that could be involved. And it is therefore very important that you think about the dependencies, keeping in view the scope of the due diligence exercise, and only then begin to exercise the effort of starting the due diligence. I will pause here because we have a poll question coming up, and I will request Abhay to put up the poll question.
So I've launched the poll. So the poll results, most of the 84% of the participants have gone with all of the above, but
Okay.
scope of the DD depends on it.
Okay.
The
So I'm
second
glad
one,
people are listening. So what is the other bullet point that you see other than the 84%?
so the other one is the 12% have gone with the nature of the business transaction. That is 12%. And 4% have gone with size and scale of the transaction. These are
Okay.
the three options.
Thank you. So
Okay.
as you see, all of these are important. And while some of you have highlighted all of the above, there are few who have focused on the scale and size of the transaction. What I would suggest is keep all of these factors in view and more, rather than just focus on one or the other. I will now move on to the next part, which is what are the resources that you need to use or have before you start the due diligence exercise. The first is checklist, checklist, checklist. And I say this 3 times because this is one of the most important elements of a good due diligence exercise. If you have a checklist, a pre-thought, pre-analyzed, pre-decided list of items that you will check while conducting a due diligence, then that will help you in doing a very systematic and thorough job of the due diligence exercise. The critical part is that these need to be updated every time. So anytime that you are undertaking a due diligence, you have to update your checklist. So for example, if you are doing a legal due diligence, you may need to have a checklist for company law matters, from labor law matters, for contract law matters, for intellectual property law matters. And for each of these areas, you need to have checklists so that the team knows what will be checked and how it will be checked. And there is a tracking done of the items that are checked. But once you have drawn up a checklist for one due diligence, does it mean that you can use it for the next one? Answer is no. You have to update it with time, with the nature of transaction, with what you are engaged to do. The nature of checklist, the items of checklist will need to change. It's extremely important that you have these checklists and that you must update them and review them depending upon the due diligence you are undertaking every time. Even if the transaction appears to be same, do not make the mistake of using a pre-existing checklist without thoroughly reviewing it and without understanding the changes that need to be made in the checklist. There are at times a need to list the various applicable laws that you will be covering under the due diligence. And at times, as the person conducting the due diligence, you may not be aware of all the applicable laws of the business which the counterparty is undertaking. At that stage, you may use the information request list to supplement your own information. And it is not a problem to ask the counterparty to list down the various applicable laws they consider as applicable to their business and then validate them with your own checklist. Of course, I am not suggesting that you ask for checklists from the counterparty, that's your job, but at least the broad areas of laws that are applicable to the due diligence, you can certainly ask, because the counterparty are the best positioned to know what laws apply to their businesses. And this is sometimes very important if there are local laws with which you may not be familiar with, or there have been changes or recent changes in the local laws which may not be available to you. The other resource that you have to look at is industry research. So when you have been given an assignment or when we are embarking upon a due diligence, you must try and understand what's happening in the industry at that time. While it is not a legal question, while it is not important from the legal point of view to understand what is happening in the industry, but knowing what is happening in the industry at that time could be extremely useful. I'll give you an example. At a point in time, we were asked to do a due diligence for a solar project. Now, that solar project was being conducted by a particular company, and that company was wanting to get into a joint venture with another company. It looked like a standard straightaway simpler transaction. And if we had not looked at what is happening in the industry, we would have straight away gone and done a simple due diligence. As we researched the industry, we figured out that at that point in time, a large number of players were getting into very similar transactions. And as we looked at in detail some of the regulatory compliances required, we found that there were gray areas, and we anticipated that all of these transactions may get into an issue with regulators at a later point in time. Now, I will not be able to get into specifics of these transactions, but the learning here is that as we did the industry research and as we figured out that so many players are getting into similar transactions right now, our focus on the potential areas that could come up later by the regulators became very important. And when we did the due diligence and when we structured the transaction as a consequence of that, we tried to take all the precautions that needed to be taken if at a later point in time there are issues that all these transactions face. And lo and behold, in a year's time, most of these transactions fell into difficulty. And because we had done industry research and we had figured out that this is a potential exposure, we could safeguard the client, and several consequences that would have other fallen if we had not taken that care could be saved. So it's also important to do a little bit of industry research before you start the due diligence. It's also important to do some research about the organization or the company on which the due diligence is conducted. Sometimes you may know about the company, but sometimes you may not. And it will be good to know the standard of compliance such a company faces, the various activities of the company, and that helps you in getting a good focus as to how the due diligence should be conducted. In addition to that, Google search, general search about that company, about the areas of business, about the areas of due diligence you are doing is good to know before starting the due diligence. That usually throws up some areas which you would not have thought about or which may be of recent or past origin. But once you see these, you can be alert in conducting the due diligence. So it's always good to do this general research on Google and ascertain the environment about the company, the background of the company, and of course, any other aspects that the search throws up. Whether or not you are asked to do a financial due diligence or not, it's very important to look at the corporate documents of the company, be it the balance sheets, auditors' reports, and key certifications. As I mentioned before, a lot of legal, tax, financial aspects are interlinked, and many legal issues can be seen by looking at the balance sheet or the auditor's report. And therefore, it is very important that even though the nature of your exercise of due diligence does not necessarily require you to look at balance sheets and auditor's report, one goes through them and at least reads the notes to accounts, the director's report, and sometimes looking at these can be a good resource in conducting the due diligence. There is also an ability to access counterparty opinions, resources, and documentation. So for example, there are at times transactions where you may ask the counterparty if on a particular matter they have obtained legal opinion, whether they have certain internal documentation, policy notes of areas of concern that you notice. And then if you want to get a little more detail, it's very easy to raise these questions as a part of IRL or as a specific question with relation to any finding and ask the counterparty to provide these, because oftentimes companies have certain opinions, resources, or documentation which they have available relating to transactions which may be questionable. Then before starting the due diligence, sometimes it's easy and important to identify special areas of focus. And you can use your prior experience of DDs, your industry experience, and contemporary issues to identify what these areas could be. Just to give you an illustrative simple example, let's say somebody hires you to do a labor law due diligence. Now, in our experience in India, we know that several organizations may be having issues with overtime, with contract labor, because these are issues of importance and are topics of intense discussion in the Indian industry. If you have this experience and if you have this industry understanding, as you embark upon labor law due diligence, you would know that this is a critical area of focus, and therefore you can devote your attention and time to this on the basis of your prior experience. It's also important and interesting that you focus on the contemporary issues. For example, there could be recent decisions of the courts that may be there on particular aspects, and that may be shaping the way a particular legal issue is handled. And it is therefore critical that you keep the antennas on and at least make yourself aware of what the contemporary issues are. For example, right now we are faced with the COVID situation, and a lot of organizations are struggling with force majeure and similar types of questions. And if these are the contemporary questions and you are doing a due diligence, then it is very, very important for you to ask these questions in the due diligence process as to if the organization has faced some of these questions or not, and how the organization is dealing with them. Because in turn, all of these issues will have an impact on the business, and that impact will be carried on to the prospective buyer or your business owner who will acquire that business in the transaction. Now, I want to also talk about something which is known as a data room. Now, for those who are already proficient with due diligence, they would know what a data room is, but many of you may not be aware what a data room is. We all live in electronic age these days, and therefore data rooms have become very, very, very useful. So earlier, most of the information from the counterparty was shared in hard copies. So you would need to visit the counterparty location. You will need to see their records, registers, documents to figure out what the due diligence exercise is and how you would carry it out. But now there is a virtual room that is set up. And in the virtual room, all the data is placed. So whatever you need to see, the counterparty is then obliged to put that information in the data room. You have access to that location in the server. You go there and you see the data. So that becomes the focal point of the availability of all the records and documents which you will have to access and review. And when you look at data room, what are some of the important things that you have to keep in view? First is access. So access to data room is obviously not to everybody, and it will be limited with restricted rights. So you must get appropriate access rights to the data room, because in the data room, usually it's not just information relating to the subject that you may be undertaking as due diligence, but it may be a whole host of other information that may be placed there. And access could be restricted depending upon the need to know and the area that you are investigating. Therefore, it's important to understand what the accesses are, and you must secure relevant access for your team. Understand the index. Usually, if you go to a data room, most of the information is classified, and there is an index which is there of all the information. Before you start looking at your own chapter or your own area or section, it's very important to go through that index very carefully and see where all the information is, and does it necessarily and completely cover all the areas that you are looking to conduct due diligence on. If there are missing areas, you have to highlight them. And it is therefore important to understand the index, because some of the information that you may need to look at may not necessarily be in the sections that you are doing a due diligence on. So for example, if you are doing a labor law due diligence and there is a section on human resources, your natural tendency may be to focus on that section and ignore the section on financial, where all the balance sheets and profit and loss and other financial data is placed. But as I mentioned, it may be important for you to see that information, and therefore you must also look at where that information is placed. So understand the index of the data room before you start on the exercise. Access rights have to be used as granted. So we should not try and over leverage our technical expertise or capability and try to access areas where you are not authorized to access. If you have rights, you use them. If you do not have rights, please ask for them. And there is no point in breaching the access rights because, as I mentioned, we are bound by non-disclosure agreements. And also, it's very important to honor the rights that have been granted to you and not exceed them. Downloading of information from the data room is many a times restricted, and certain permissions have to be sought for accessing and downloading the data. So usually you may be allowed access to a data room and you may have to view the information on the data room itself. But if you want to download certain things, either it will be permissible in the data room and then you can download easily. But if it is not permissible, then you will have to take permission. So have clarity on what you can download and what you cannot download from the data room. Tracking happens in data rooms. So in most data rooms, if you have accessed a particular location or a particular file or a particular document, it is tracked at the background. And there are controllers who would know which person with what access has accessed with particular information and which particular document. Because tracking is happening in data room, it's very important that while conducting the due diligence, you are also very diligent, because if you have accessed a particular document, but you have missed noting down critical information that was available in the document or in that section, then later on, if there are failures on account of due diligence, then it is entirely and squarely at your door. So it's very important that you know that there is tracking in the data room and the exercise of due diligence is done diligently, not thinking that this is just a data room and nobody knows what's happening here and which document you have accessed for how much time. Trigger emails. So as I mentioned, data room is where you have all the information placed by the counterparty. But in actual life, what happens is that all of this information is not placed at one go. As the due diligence exercise progresses, either the data rooms are updated or in response to queries by the due diligence teams, the data room is updated with additional information. And there are trigger mails that are generated indicating that there are updations happening on data room. So it's very important for you to keep a track of these so that whatever updation has happened on the data room, you can review that after it has been updated. There are updations to data room also of the data which you may have reviewed once. So for example, you may have reviewed some data of a particular type of contracts, but some additional contracts may get updated over time. Therefore, it is important to keep a track of the updations that are there in the data room, and most data rooms have facility to know by filtering and mechanisms like these, what are the updations from the last date till the current date. And if you are keeping your own track as to which date and on what basis you have been accessing the data room, then you can use those filters to look at the additional documents. Notifications from data room have again to be tracked, and it is important that you keep a track of these notifications, because sometimes the data room may be closed. Sometimes there may be a limitation of time up to which the data room will be available, and your due diligence exercise can get into jeopardy if you have not understood how to use the data room and if you do not end up efficiently using the data room. Because as we discussed in the original part, there is a limitation of time, there is a limitation of cost, and therefore one must be very efficient in making use of the data room. DD team. So there is a due diligence team that you will create for conducting the due diligence. And you need to prepare that team for the due diligence exercise. Now you may have a team that is already ready. They may have already conducted many due diligences in the past, but it's still very important that team must undertake that due diligence exercise, which they are starting on now, as a new due diligence exercise, because no due diligence exercises are common. And it is therefore important to get absolute clarity on the role and responsibility of each member of the due diligence team, and the corresponding counterparty contacts must also be identified. So whoever in your team is doing a particular aspect of the due diligence must know how he or she will coordinate with the counterparty and what is the role and responsibility that person has to discharge. Training, education, and engaging each team member is important, because what you may know about the transaction, the team member may or may not necessarily know. And even though a team member may have done similar transactions in the past, for this particular transaction, you need to engage them and educate and train them about the specific areas, transaction drivers, and the business deal, so that they understand what they are going and looking for when they're conducting the due diligence. If the understanding at your level or at the team leader level does not filter down to the team member level, then obviously the outcome of the due diligence will not be good. You must set expectations. So a team member must know what is the time available, what are the areas, what are the items of the checklist that has to be completed, and the expectations from each team member must be clearly spelled out. There has to be continuous communication and reporting process. Due diligence is a dynamic activity, and unless there is continuous communication between the person doing the due diligence and the team leader, the process may not necessarily be efficient, or key items may be missed out. So continuous communication is important. Timelines have to be observed and adhered to and kept a close check on, because at times there is limitation of availability of data room, and in situations where you have to go on site to do a due diligence, the timelines are important, because if you visit a location once, it may be difficult to visit that location the second time, and therefore it is important to align on the timelines of the due diligence. Monitoring and supervision is a continuous process while the due diligence is happening, and it is very, very important that each member's activity is monitored and supervised, because the sum total of the findings of the team is what the due diligence finding will be, and therefore continuous monitoring and supervision, and not just monitoring at the end of the exercise, is important. Chinese walls, competitors, and sharing of information. Now, this is an interesting area, particularly as I mentioned in the opening session, that sometimes you may be acquiring a competitor, or there may be an interest in a competitor's business which you are acquiring. Now, it is not necessary that the business will ultimately get acquired, and therefore you are effectively looking at information of a competitor as you are conducting a due diligence. And there are several laws which prevent sharing of information between competitors. In fact, under the competition laws, there are significant penalties that can follow if competitors share certain critical information or confidential information. For example, pricing information or volume or customer information. Some of these are not allowed to be shared between competitors, because then it can be an anti-competitive activity. Therefore, if any such due diligence is being undertaken, it is extremely important that Chinese walls are maintained. And what I mean by Chinese walls is that there are special teams that are carved out, which will have no interface with your own business team. So for example, if company A is wanting to acquire company B, and company B is a competitor of company A, then the due diligence teams will be such that company A's business teams will have no access to the business information of company B, and the due diligence team will maintain complete Chinese walls between the business teams of both the competitors, and conduct the due diligence exercise in complete confidentiality. Also, it is important in such situations what information is shared by the competitor and what information you share with the competitor. And these things are material because they have both financial as well as legal and regulatory implications if this information guideline is not observed. It's very important for each member to get it right the first time. As we know, time and resource constraint is always there in a due diligence. So if a team member is looking at a document, it's very important the person knows what to look for in the document, how to evaluate the document, and how to get the relevant information that that person seeks from the document. It's very important to get it right the first time. You will at times not get the opportunity to revisit that information. You may not get the opportunity to revisit that document. And therefore, it is very critical that the team is well trained in advance and well educated and engaged so that they can identify the key points in advance and get it right the first time. We now have a poll question coming up. So I will pause here and request Abhay to take up the poll question.
Right, sir. Right, sir. We've launched the poll, so anybody who is interested.
There is a slight error. The bullet number 2 and bullet number 3 have combined. So if you want to choose bullet number 3, please choose bullet number 3 and not bullet number 2. Well, I guess most people have got it right because I think there was a little bit of error on our part where bullet number 2 had the bullet number 3 question embedded in it, and therefore people have ended up choosing bullet number 2 as well. But I think most people have got it right that 90% of the people believe that this is the location where the necessary documents and records are made available for the conduct of DD. That is the right answer. Some of you have chosen a dedicated room under lock and key where all data and findings of the DD need to be ultimately placed. Unfortunately, that's not the right answer because data room is the place where information is provided for the conduct of the DD. It's not a post DD location. I will move on with this observation. So when you are actually now conducting the DD, what are the basic steps? As we discussed, we need to have checklists. So one of the most important aspects is you have to use the checklist very diligently while you are conducting the due diligence. A checklist will contain a whole list of items that you need to check, and each and every item must therefore be checked with reference to the record that it relates to or with reference to the provision of law, with reference to which you are ensuring compliance. And only then you should check the box or you should make your notes and recordings. It's not a good idea to use a checklist like a meaningless performer form and just keep ticking the items without actually checking this. Diligence in checklists is key, and as a team member of the team, it's very important that this exercise is conducted most carefully. You must retain and make a record of the various items that you have checked while you are going through each item of the checklist. So for example, if you have checked a particular form, if you have checked a particular document, the details of that document, the details of that agreement need to be also noted down as you check the box for any particular item. Then as you complete the due diligence checklist that you have filled in, you must sign it, you must date it, so that it becomes a record of when this exercise was conducted, and on that day, what documents did you see. This is the heart of the matter, and it is this particular portion that ultimately decides how good a due diligence exercise ends up being conducted. If the team members do not use the checklist diligently and do not make good record of this, then the ultimate due diligence exercise will not give a good finding. There are at times need to have confirmation of certain information from the counterparty. So for example, if you are filling certain information and you have seen a particular document, then you need to validate from the counterparty if there are any other documents available or not. Sometimes this information is important. If the counterparty says this is the only document that's available, then if you have noted it down, that helps you, because if there are other documents that have not been shown to you, then that will exclude your liability. But if you do not ask for those questions and for those documents, then the counterparty may not necessarily provide the same, and there could be gaps in the due diligence exercise. So it's very important to also seek confirmation, and in certain critical documents, you must have specific confirmations from the counterparty to the extent feasible that these are the only documents that you have seen or have been provided, and that there are no other documents. And this becomes relevant because sometimes there are supplementary agreements, sometimes there are notices or other related items which may not be disclosed to you. And if you have confirmations either in the information request list or while conducting the due diligence from the counterparty in writing that this is all that is available to you, then the burden of proof shifts to the counterparty if there are issues at a later point in time. The entire communication and interface with the counterparty has to be handled very sensitively. So please remember that you are doing the due diligence exercise for your business teams, and the counterparty need not necessarily know in advance all the issues and concerns that you are noticing. It is also important, therefore, how you interface with the counterparty and how you ask questions of the counterparty. Many a times there are processes which are set up for interface with the counterparty. So there could be situations where you may be allowed to directly talk to people who are on the other side, or there may be a centralized process where all of the questions of the various due diligence teams or members are centrally assembled and accumulated, and then all these questions are then shared with the counterparty for answers, because there could be sensitivities with regard to the confidential nature of the transaction, and it may not be very advisable for either all the employees of the counterparty or some employees of the counterparty to know that such a transaction in place. Therefore, how you interface with the counterparty is very important, and it has to be handled very sensitively. If there is any doubt, it's better to check with the business teams or the team leaders who are managing the transaction as to how the communication needs to take place with counterparty as you are conducting the DD. Escalation metrics. Now, this is an interesting area because at times team members will look at issues and documents and they will say, okay, this issue is relevant, this issue is not relevant, let me take it up or not take it up. It is always a good idea that at least one additional level of review takes place when an issue is identified. So for example, if a team member has identified 10 issues, it is usually advisable for the team member to take up all the 10 issues to the team leader and let the team leader filter and decide out of the 10 issues which ones to be retained for highlighting and which ones are not material. And then likewise, if the team leader has finally shortlisted 5, he should take those 5 to the next level and then so on, so that there is at least 2 levels at which each issue has been reviewed before it is being either selected as being important or discarded as being unimportant. And this filtration will obviously happen with reference to either materiality thresholds or with reference to transaction filters or with reference to the focus of the due diligence. It is also important to know this because many a times there are multiple smaller issues that may spring up individually and may not look material. But if some of these issues are aggregated, then the entire issue could be such that needs to be highlighted. Therefore, when you do a two-level review, some of these issues can get captured and that will add value to the due diligence exercise being conducted. As you access data rooms, it's important to keep a record of what documents you have viewed, on what dates you have viewed, and which personnel access the data. So a log of how you have accessed the data room is important to be kept. And this will be very useful if at a later point in time, there are issues that are needing to be revisited, or if there are matters that you need to rediscuss with your team leaders, or in the data room, if you have to revisit a document, then this helps if all this information is systematically available. It is also important at the same time to identify and note which areas you have not reviewed. As we discussed in the opening part, there could be certain inclusions and exclusions in the exercise of the due diligence. So there may be information that may be placed in the data rooms, but you may not be reviewing them for the reason that it's an excluded area from your scope. And it is therefore important to note that even if certain documents are placed in the data room, if it's not in your scope to review, please note down that these are the areas you have not reviewed. Maintain a summary of this, because at the end of the day, when the due diligence report is prepared, you can clearly explain what are the inclusions and what are the areas of exclusion. Please do keep a record of all the communications and exchanges of data that may be taking place with the counterparty as a part of the due diligence exercise, because this is critical record. Because later on, when agreements and transaction documents are created, there are representations and warranties that are given by the counterparty. And some of these representations and warranties materially turn on what communication and information was exchanged as a part of due diligence. Unless and until a record is retained of what information was exchanged and shared with you as a due diligence team, it will be very difficult to later on enforce some of these guarantees and warranties, and therefore a record of communications and exchange of data should be retained. Now, while you are conducting the due diligence, what are you supposed to focus on? Please stay focused on the outcome from the decision maker's perspective. As in, what is the final outcome that you want to give to a decision maker as a result of your due diligence? That is very important, because that will drive how you look at issues, how you look at documents. And if you keep that business focus in view, you will be able to find key legal issues rather than just find every and anything, and all of that may not necessarily be relevant. And if the key issues in the process get lost because there are too many issues that you have identified, it will not be a useful due diligence report from the decision maker's perspective. So please do focus on what is it that you need to finally present, and what is the outcome that the decision maker is looking for from your due diligence exercise. There are key issues and transactional drivers which we understood at the time of the scope of the DV. These have to be kept in view, and these differ from transaction to transaction. Now, let me give you an example here. Let's take you are acquiring a business, and underlying that business, there are several properties which are tenanted properties. So the business is running on properties that they have taken on lease from various lessors and landlords, and you are acquiring this business. Now, in certain cases, it may be important only to see that the various leases are properly executed, there are due registrations, there is enough validity of the due leases, and that may be sufficient. But in certain other situations, it may be important to also understand what the ownership rights of the lessor are, whether the ownership rights are properly exercised or not, and therefore the key issues or the transactional drivers will determine the nature and extent of the due diligence. So if there are 200 locations which are under lease in a particular business, you may in your sample decide to do a due diligence of 5 or 7 or 10 of those locations. May not be all of the 200. And even when you do those 5 or 7, the focus may be more on the validity of the lease and not so much on whether the owner in each case is duly authorized to lease or whether the title of the owner is clear or not, unless of course that is in scope. And even if that be so, you may be doing it only on a sample basis, because ultimately that is an important aspect of the due diligence, but that's not a key issue. But on the other hand, let's take an example where you are acquiring a business and that business primarily consists of a large piece of land which has been taken on lease. Now, in this situation, that piece of land is the key asset of that business which you are acquiring. Therefore, not only is the lease important, but it is also important to know that the title of the lessor is also good, because if the lease fails, then the entire asset fails. When you do the title due diligence of the lessor in a situation like this, it may also be important to look at local laws applicable. So you may not just look at the title of the lessor, you may not just look at the lease transaction, but you may also look at, or you may also need to look at whether or not that lessor was entitled to give the lease in the first place. And also, if such a lease is given, are there any implications? So the key issues and the transactional drivers have to be kept in view as you are doing a due diligence. And even though in both the situations, there are leases that you are reviewing, the focus is completely different and the extent and depth of due diligence will vary. While identifying the issues, it is very important to analyze and research the following, which is, what is the implication of this issue? What is the potential solution of this issue? And what are the key concerns that you are picking up from a particular issue? This is an effort that must be undertaken simultaneously with the identification of the issue, because remember, ultimately the due diligence is aimed at helping the business undertake the transaction or not to undertake the transaction. If you are able to understand what the implication of an issue is and what the potential solutions are, what the key concerns are, then that could be material information both for deciding whether to go ahead with the transaction or not. And also, it could be very important in sometimes shaping the transaction. So I'll give you an example here of a due diligence exercise and how this became important. So here was a company A wanting to acquire a company B. Company B currently has, let us assume, only one business that company B is carrying on. So it's a simple transaction on the face of it. You acquire company B's shares and then you take over that company and the business comes with that company to you. Interestingly, in this case, company B was not a new company. They had not been in existence for only a few years. This was not the only business they had done, but there were businesses they had done in the past. So this was, let us say, a 10-year-old company or a 15-year-old company, and they had done businesses in the past, but all of those businesses have been closed and all of those businesses were no longer in operation. And even today, the only business that they were carrying on was the business that you wanted to acquire. But if the client or if the customer who is acquiring the business is sensitive about past issues that may arise, then it will be important for you to go into further details of the businesses that that company had conducted in the past. And in a real life situation, there were concerns that a customer had in a situation like this, where the customer or the client or the acquiring entity did not want to acquire any past liabilities relating to health issues of employees. Now, it so transpired during the course of the due diligence that some 10 years ago, this company was undertaking certain business activities. And in those business activities, there were certain operations that were being carried on, as a result of which there was a potential that some employees who were working with the company at that time may have contracted certain diseases. And the nature of these diseases were such that they may have revealed only after 10 or 20 or 30 years. So they were underlying diseases that they acquired, not like the COVID of today, and they would reveal themselves 20, 30 years later. Now, as we were sensitive to the fact that the customer or the client or the acquiring entity did not want to acquire any such liabilities, these questions were asked at the stage of conducting the due diligence. And it so transpired that the company which was owning the business was not able to confirm that all the employees who are currently employed, none of them were in that business or at that time. So there were employees who may have been involved in those old businesses, and therefore there was no way of understanding whether those employees had contracted these diseases or not. Because there was focus on this key issue that the business was focused on, the transaction ultimately did not proceed because there were employees who were past employees, and the whole transaction had to be restructured, and then they acquired the business minus the employees who were historical employees of the company, and the whole transaction got restructured due to a finding in the due diligence. These are the kind of things that can come up if one is careful in identifying issues, keeping in view the expectations of the business, and not doing a due diligence in a mechanical fashion. As issues are identified, it's also important to keep categorizing these issues in terms of criticality and impact. As we discussed, ultimately the due diligence findings have to be presented in a final report. And when you are presenting these reports, the reports are presented with issues categorized into high impact issues, medium impact issues, and low impact issues. So as the due diligence exercise is being carried on, and as you identify issues, it's important to keep categorizing them simultaneously, depending upon impact, either financial or regulatory, or if there are any fines or imprisonment issues involved, so that when you are presenting the final report, at that stage you are not struggling and not reassessing whether the issue is really important or critical, or what is the nature of that issue. Make a list of documents viewed and keep an audit trail. So this is very important, that whatever documents you are viewing, you keep an audit trail for yourself, because if this is not done, then at a later point in time, you will not be able to explain or justify how the due diligence was conducted, and if certain areas are missed, whether the information was not made available, or if it was a team that missed identifying those issues. So keeping an audit trail is important of the documents viewed. Continuing with the aspect of due diligence. So as we discussed, the focus is on litigation. It's a legal due diligence. The focus is on litigation. There would be material cases that may need a detailed review, and there would be contracts that may need detailed review. Now, in terms of litigation, you may find certain issues identified by looking at contingent liability notes to accounts. So while you may be provided with a summary of litigation, if you also end up looking at the contingent liability notes to financials or books of accounts of the company, there could be certain aspects that can come out by looking at that area. In terms of material cases or material pending cases or litigation, it is both important to review the cases that have got concluded as well as those which are ongoing. And again, keeping in view the transaction and the nature of the due diligence, you have to ask for this information, and keeping in view the materiality thresholds, etc., you have to identify and keep a focus on the material issues and then research them appropriately. There are contracts that need to be reviewed as a part of legal due diligence, and often the focus is on change of control clauses. So what are change of control clauses? in some contracts, there are provisions that if the control of the business changes, then the contract will be void or will be terminable. Now, if there are any such change of control clauses which have an impact on the contract and you are acquiring that business, then obviously there will be change of control. And in certain contracts, depending upon the condition, that change of control can lead to that contract being rendered either voidable or void. And if that contract is a material contract for the business, then you may lose value in the process. Therefore, in contracts review, it's also important to focus on some of the key areas and then basis that develop the findings of due diligence. Then there are warranties which are sometimes hidden and you may not necessarily be able to see what the warranty obligations are. So for example, if a company has been selling products, there are underlying warranties that have already been given. And some of these contingent liabilities are or may not necessarily be fully captured in the books of accounts. So it's important to ask some of those questions because there may be contracts which are implied, there may be warranties which are implied, and it's also important to keep a focus on that. Then key employees of the company, like the managing directors or senior employees or officials of the company, uh, are important because once you have acquired the business, some of those employees may be important for you to continue the business. And therefore, there may be an expectation by the business team to review their contracts and make sure that then they can plan how to retain these employees or deal with these employees as the businesses get acquired. And these are some of the areas that come up in focus while you are conducting a DD. And these questions you need to ask when you are agreeing on the scope of the DD so that you can plan accordingly. The other area is related party transactions. And related party transactions are important because in certain situations, you may not be acquiring the entire entity and you may be acquiring one or two companies or one or two subsidiaries. Often, if that's the nature of the organizational structure, that there is a holding company or there are sister companies and there are related party transactions, then if you are extricating a particular company from that web of companies, what happens to the related party transactions and how will they impact the past business and how will they impact the business when you have acquired it going forward? So for example, if there are head office staff, if there are certain common systems being used by the entire group of companies, then how will you be able to run the business when you acquire a particular entity from those web of entities are important questions to focus on. And therefore, a special focus needs to be kept on related party transactions so that you can plan for them and identify them for the business teams. It's also important to evaluate how independent the auditors, the counsels, the consultants of the counterparty look. So if there are good auditors, if there are good lawyers, the counterparty has been using, that can give you a lot more comfort in terms of relying on the reports that you see. But if you find that auditors are very close to the promoters of the company, if the lawyers are very close to the promoters of the company, then in those situations, their independence may have been compromised. And therefore, the level of detail, the samples that you picked for doing the due diligence, all of that can materially change depending upon who the third-party consultants, advisors, auditors of the company are. And that again becomes an important area of focus to keep in mind while you are conducting the due diligence. Always look beyond the ordinary. So, as I said, no two due diligences are same, and in a point of time, they may also require different focus. So look beyond the ordinary and look at issues which are contemporary, look at issues which are not obvious, and always think about them so that while you are conducting the due diligence, you can focus on these. For example, COVID is a current issue. It's good to think about it. And then as you are doing the due diligence, evaluate the impact on contracts, etc., etc. The transactions obviously will keep going on. And therefore, every time the issues and the contemporary issues will be different, and you have to look beyond the ordinary to be able to do a good job of the due diligence. I will pause here for a poll question and will hand over to.
Right, sir. Right, sir.
Yeah, so we have a very interesting response here, and I think the responses prompt me to emphasize a point. So I see 26% of the people have opted for that it is necessary to check and audit each transaction, whereas 64% have said focus on the transaction and conduct the DD as per scope and sampling size agreed. Now, this is a very important point that we must remember, that in a due diligence exercise, it is neither possible nor necessary to check and audit each and every transaction. As we discussed, each and every transaction cannot be audited, and that is not the purpose of conducting the DD, unless and until for any particular type of transactions, it is within the scope that you audit each and every transaction. But that is usually and almost always never the intention that the due diligence team will audit each transaction. It is critical, therefore, to agree before the starting of the due diligence exercise, what is the scope, what is the sample size, what is the nature of transactions, and in what detail will you conduct the due diligence. If you do not agree on this and you embark upon the exercise of auditing each and every transaction, the findings of the due diligence will not be good. You will invest an unreasonable amount of time and a very large amount of expense, and yet you may not be able to fully help the business. And in any case, you may not be able to fully justify the audit because it will not be possible to do an audit of each and every transaction. So it is important to understand this distinction as you undertake the due diligence and keep focused on and agree on the scope and sampling size before one starts the process. 8% of the respondents have also indicated only focus on duly approved reports of the board of directors of the company. Now, that's again an incorrect answer because most of the information may not be available in these accounts. These are actually consolidated level information, and these are important to see, but these are not the only aspect to see. And to that extent, I would urge you to have in mind the transaction and conduct the due diligence as per the scope and the sampling size agreed. So now that you have conducted the due diligence, etc., now comes the time to draft the report. So you have to prepare a report of your due diligence exercise, and how does one go about doing it? First and foremost, if there is a report format that was agreed in advance, the team must adhere to the report format. Because as I mentioned, sometimes many of these separate reports, being a result of due diligence conducted by separate teams, may need to be consolidated at a certain level. Therefore, it is not advisable for you to ignore the report format that was agreed and develop your own findings in your own format. You have to adhere to the report so that it helps the overall business team in understanding the findings of the due diligence. It's always a good idea to make an executive summary of what your findings are and what the main issues are. There is no point throwing a report of 100 pages to a client and then leaving the client to figure out what are the main issues. And it is almost always useful and expected that a report will contain an executive summary of how the process was carried out, what are the key findings, what are the various suggestions, etc., etc. While preparing the report, what is important? It is very important to keep your observations precise. Many a times, there may be a tendency for lawyers like us to keep writing what the law is, what the finding is, and keep filling in pages and write long details of what the finding is. As against that, one must look at it from the business point of view, from the point of view of the reader. So keep your observations very precise, keep them business friendly. It should be easy and possible for a person who is ultimately going to decide on the business transaction that he understands what the finding is and what is it that you are recommending. Look at it not from the point of view of a lawyer, but look at it from the point of view of the business person who has to take the decision, and make your observations in a precise and business friendly manner. All of the information that you put in should be informative and decision oriented. There should not be data overload. So if, for example, you have done a review of 100 contracts, there is no point giving a summary of each of those 100 contracts and then giving a summary of what are your findings, etc., etc. You must look at what is the focus area, what are the key issues that you have identified, and how you want to present it, and what decision you are asking the business owner to take when he looks at the report. Therefore, avoid data overload in your due diligence reports and make it more informative and decision oriented. Sometimes, if you are an external lawyer, there may be a tendency to justify fees by writing pages and pages and seams of information and giving a data overload to the client. It's not a good idea. If you are an in-house lawyer, it's also not a good idea to show that you have worked very hard by preparing a large and a very long due diligence report, because that's not helpful. You may have all the information that you need to make the report, but the report that you present must be very precise and decision oriented. You must anticipate and be ready for additional questions. Almost always when the reports are presented, there are business people asking questions. There are questions that are raised by the counterparty, because many a times at that stage, the counterparty is involved. And if you have highlighted certain issues, the counterparty may have a different view. Therefore, you must be ready for additional questions. You must anticipate them and be ready to defend the position if you are identifying an issue, so that the business owners can clearly understand what the issues are and any ambiguities are avoided. It's also important to harmonize the findings with other teams. For example, if there is a financial due diligence happening at the same time, or a tax diligence happening at the same time, or a human resources diligence happening at the same time, then it's better that before you put any observation and finding in your report, and you believe that this may have a very clear financial or other implication, that you harmonize your findings with the other teams. So let me give you an example. If, for example, you are doing a due diligence on employees and you figure out that the company has been non-compliant in payment of provident funds for those employees, then it is very likely that the financial team would have also figured out liabilities in the profit and loss account relating to unpaid provident fund. There is a possibility that the human resources team may have figured out certain issues relating to claims arising out of provident fund, etc., etc. And if you are making a presentation relating to a finding which has these cross linkages, it's always better to harmonize your findings with other teams. That will help educate all of the teams who have looked at the due diligence from that perspective. And also, it can course correct any issues that you may think is a major issue, but some other team has looked at it from a different perspective and has a different point of view. So harmonization of findings amongst teams is an important area as you draft your report. Make a list of documents that you have reviewed. What are the exclusions and limitations as you have conducted the due diligence? If there are appendices that you need to attach, giving more details of any of your findings to help decision making, then those appendices must be drawn. And again, as I say this, It's very critical to, at this time, keep in view what the scope was. All of this information that you provide should be aligned to the scope agreed, and the appendices should also be drawn up and provided, which are business friendly and informative and decision oriented. There is no point in giving a list of 200 appendices with all the summaries of various contracts or various litigations, as the case may be, because none of these appendices will then be useful to the business teams, and they will only be like a data overload. So one has to be very precise and careful in selecting these appendices, and yet making a comprehensive submission regarding the due diligence finding. Way forward for each salient item, this is a key issue, and I will discuss this separately on the next slide, because many a times as lawyers this is missed out. So once you have identified an issue, it's very important to focus on what's the way forward. So is that issue that you have identified remediable? Can it be corrected? And can it be corrected before the transaction takes place? So it's important to give focus as to whether this issue can be course corrected before the transaction takes place. There could also be a situation where an issue is there, but you don't want to deal with it post-transaction, but can it be corrected post-transaction? So can it be corrected after the transaction is over, or will it involve then significant liabilities if it is left for correction after the transaction? Must evaluate if an issue requires the transaction to be restructured or the transaction to be conducted in a particular way so that that issue can be minimized in the future. Whether that issue that you are identifying can be a negotiation point, or can it be overridden by the business teams, or whether it is such that it can be disregarded, or whether it is such that it's a deal breaker. You have to identify the issue in that context and think about that issue in that context. Because once you are presenting the report, these questions will be asked of you as to what is the importance of this issue and what is the way forward for this issue. Sometimes issues have importance also on the valuation of the business. So business may have been valued at a particular level, but because of a particular issue that you have identified, the valuation may dip. And therefore, if a significant issue is identified, is there an impact on valuation? That should also be understood by the team when the report is being prepared. And all of these issues that have been identified, how will they be captured in representations and warranties and indemnifications and responsibility fixed for costs that may be incurred for remedial action? So these are also items which you need to think about as you present issues as a part of the due diligence report, because all of these will then help the business teams and the transaction teams to use the due diligence findings in a meaningful way. Report presentation. So how should you present the report? So usually the leader of the team presents the report and the DD team supports on any specifics. Now the leader may depend upon whether it is being presented at a at what level the report is being presented. If it's a consolidation of multiple companies' findings and you are doing a very large due diligence, only the leader at the helm of affairs who is overall coordinating the due diligence will consolidate the findings and present the report. But at different levels, the reports will get presented either within the due diligence teams or otherwise. So usually the leader presents the scope and the team supports the specific. You must outline the scope of the due diligence and qualify clearly areas where excesses were not allowed. If there were limitations in the data that was given to you or the sample size, you must highlight disclaimers. And you must also clearly point out that due diligence is not a fraud investigation and that it is not a full audit and that it was limited by scope. The business should never be given an impression that you have done 100% audit of each and every transaction. And therefore, the qualifications are important to state, because if any of these qualifications are not acceptable to the business team, then the business teams can at this stage either require the due diligence to be supplemented by a further due diligence, or at least they are aware of the limitations within which the due diligence is carried out. So it is important to capture these aspects as a part of report presentation, because many a times when you have agreed about the scope of the due diligence report, that may be with a different team, but the report is being presented to a different team. And to that extent, the qualifications and limitations must get highlighted to the person who is now receiving the report, and do not assume that all of these are known to that person. So please make sure that your report has a section where you outline the qualifications. And of course, there is a general rule to qualify that whatever you are presenting is like not an assurance to any other party, and you are responsible, so long as that DD report is concerned, only to the party that has engaged you, so that in future nobody can rely on your report and come back and question you on the findings. It's only the person who has engaged you, to whom you are responsible, that this report is meant for. After the DD is done, after the report is presented, it's also important to keep certain records. You must agree on the period of record preservation. So whatever are your findings, whatever documents you have accumulated, you must agree for what period you will preserve these records, because many a times transactions take place and then issues arise much later, and you may be at that point in time asked to provide the records that you saw or have preserved while you conducted the due diligence. You must state that you have no responsibility to update these records. So for example, if you have provided a due diligence report and it's a report that has been done in, let's say, June of 2020, then you should make it clear that your findings are only up to June 2020, and you have no obligation to keep the businesses informed of any changes that take place after June 2020. And I say this because sometimes the transactions do not get concluded immediately after the due diligence reports are presented, and it may take 6 months to a year, maybe sometimes more, that the transaction is taken up again or gets concluded. Now at that stage, you would not have a responsibility to keep updating the report unless and until it's part of your scope and you have agreed to specific updations. Make sure that all the record that you preserve is kept confidentially and you maintain its security. As we discussed while conducting the due diligence, there are confidentiality obligations and they apply to record keeping post due diligence. It will always be a good idea to preserve the contact of team members who have conducted the due diligence and retain them, because either on account of attrition or changes in personnel, if you lose some of these team members going forward, then there may be a need to access these team members if there are any questions at a later stage regarding the due diligence. And for each due diligence report that you have done, it's good to keep a contact list of who were the team members for this due diligence, so that when you retrieve data later on, you know exactly who worked on which and how to contact that person. The preservation must be of all the data, of all the documents, emails, etc., so that you have a whole host of data available with you, which formed the basis of the due diligence. Now in this, sometimes the data that is available in the data room is not going to be available with you, but that's all right. You are supposed to preserve only what you have either downloaded or have had access to. But if the data is not available from the data room with you, that's perfectly fine. But you have a record of what you access in the data room as a part of the checklist, and that should suffice at a later point in time. And the vendors who actually provide these data rooms are under obligation to maintain that record, and that record can always be retrieved at their instance. It's also important to be very systematic while preserving these records, because that will enable retrieval if it is required at a later point in time. And some thought must therefore go into how you will keep the record of each due diligence and how you will systematically preserve it with actual indexing, etc. Don't just put everything in a box and mark it as a due diligence, because then when you need to retrieve it, it will be almost impossible to figure out from memory what meant what. So some effort and time is better invested in systematically preserving the data. I'll pause here for a poll question now. Abhay?
Right, sir.
Yeah, I'm glad all of you have almost got this right. The answer is all of the above. And those of you who have checked the other boxes, these are not wrong answers, but all of the above is the correct answer because all of these points are important when the transaction is done. So in closing, what are the conclusions from today's sharing? This is just an introduction to the due diligence exercise. As I said, this is just a primer. This is not the be all and end all of everything. This will just egg you to know and understand how you want to approach a due diligence and how it should be done in a meaningful way. Each deal is different, issues are different every time, and each due diligence needs special focus and approach. And we have discussed certain aspects which have to be kept in view. And it is very important that whenever a due diligence is approached, you must look at the deal, you must look at the issues, and you must evaluate what are the areas of special focus and approach, and then start the due diligence exercise. Last but not the least, the due diligence outcome has to be meaningful and helpful for decision makers. Therefore, always think like a business lawyer, where business comes first and lawyering comes later. Because if your legal due diligence report is not meaningful for a business decision maker, it has not served its purpose. And as you look at it from a business point of view, you will be able to look at it much more meaningfully as a lawyer. And therefore, keep the outcome and the focus in view. And I'm sure with that, you will be able to do a good job of a due diligence as and when you are engaged in any such exercise. Many thanks for your time. I will pause. I think we are a little over 1 hour, but Abhay, we have time for some Q&A.
Right, sir, right. So we have opened the question answer link. So anybody who wishes to go to the questionnaire, he can do that. We can also take questions. So 2 questions we can take. The question answer button is there.
Yeah, I have opened the question answer button.
Yes, sir. You can choose anyone which you like.
Okay. So it says, sir, can you please share some standard format of DD report, checklist, information request list? See, there are some standard formats available. As I mentioned that these can vary by transaction, and on the web, if you go, you can find some of these reports and checklist questionnaires. But it is very important for you to apply your mind to the nature of the transaction and develop your own checklists rather than rely on any standard checklists that are available. Sir, can you suggest some website for industry research? No, this depends upon each transaction and which industry you are looking for. Sometimes there are industry associations and bodies which are available, and you can look at that industry website, but this has to be researched every time depending upon the transaction. Then the question is there a specific time to send the IRL to the counterparty, or can it be sent at any point of time, for example, while conducting the deal? Yes, so initially you are supposed to send an IRL to the counterparty, but additional points are regularly sent while you are conducting the DD, and there are usually time fixed as to when that information has to be provided, and you will have the opportunity to send the IRL and additional supplementary information that you need from time to time. Is there an effective and efficient way of cross-checking portions done by different team members? Yes, the way to do it is to look at the checklist and to figure out how the team has conducted the due diligence. And as I said, you have to do continuous monitoring and make sure that your team conducts the due diligence in the manner that you have advised them to do. As per the time test, the test should have started. What is it? Okay, it's fine. How is it different? How is it different from audit, as it primarily involves all the steps of audit and procedure involved in audit? So it is a kind of audit. It is not that a due diligence is not a kind of audit, but an audit is a statutory formality normally understood as an audit, and therefore the requirements of an audit are usually prescribed by law, but the requirements of the due diligence are usually agreed with the party. But sure enough, it's a kind of audit, so the procedure will be very similar. Do we have more time, Abhay?
Sir, it's entirely up to you, sir. If you want to take more questions, you can.
I'll just finish. So it says, what may be a few considerations to look at during DD in relation with COVID? So in relation to COVID, one of the important issues that's arising in COVID is about validity of contracts, and whether as a result of COVID, certain contracts are continuing to be valid or not. Also, in the context of COVID, issues are arising about past liabilities for the COVID period. So these are some of the considerations that you have to keep in mind relating to potential liabilities after COVID on businesses, and potential impact on revenue and incomes after COVID on businesses as a result of legal clauses. Can lawyers be held legally responsible for the DD carried out? Can a legal action be taken against them? Yes, of course, lawyers can be held responsible for the DD carried out, in the sense that you may be held liable for losses that a business may incur if you have been negligent in carrying out the due diligence. And I hope that's what your question meant. And usually there are liability clauses when you agree on the due diligence exercise with the engaging team. It says, hello, sir. Is it recommended to mention facts and figures of the transaction and documents in DD report? It's mixed experience that few clients ask for it and few reject this demand. Yeah, so it depends upon the client's expectation, but it's not a bad idea to at least briefly capture in what context you have conducted the due diligence, because if you do not provide the context, you will not be able to justify the scope and exclusion. So usually it's a good idea, but if the client specifically asks you not to mention it, then you can just confine it to the format of the report that is agreed. What is due diligence? Can be quantified. So I'm not able to understand this question. Chinese wall competitors are sharing. What does this mean? Okay, I did explain it during the session, but essentially what it means is, let's say you are acquiring a company which is your competitor. So what will happen in the process? In the process, you will get to see information of a competitor, and that information may mean that you have access to information which can give you an advantage when you are conducting your own business. So if for example, you know who that competitors, what that competitor's cost structure is, what that competitor's list of clients is. So these are information which you may get access to, but if the transaction ultimately does not go through, that competitor may be at a disadvantage. Also, under law, there are restrictions on what information competitors can share with each other, for example, with regard to price fixing, etc. And therefore, Chinese walls means that when such an exercise is being carried out, it is carried out by teams which are kept completely insulated and separate from business teams, and they are under strict confidentiality, so that the information is not shared between business people of the competitors, and it is filtered at a level at which it is shared for the transaction to happen. So that's broadly what it means. Whether some defects in DD gives rise to negligence? Yes, of course, depends upon the kind of defect that is there. Also, sir, due diligence subset of M&A. It is a subset of M&A because M&A, it is a subset of M&A if there is an M&A transaction, but it is not necessary that due diligence can be done only in M&A. There could be due diligences outside M&A transactions also. So you can understand it in that context. I think, Abhay, we have dealt with most of these questions, right?
Right, sir. Right, sir. Thank you, sir, for the insightful session. I hope our attendees have benefited immensely from your experience.
Thank you very much.
Okay, sir. Thank you, sir.